Okay, fam, Jerome Powell spoke today about the 25 basis points cut and the market overreacted. I want you guys to sit tight because I'm going to explain to you guys why they're lying to you and why this is rigged. And we're going to listen to what Jerome Powell had to say today during the Fed Minutes meeting. And I'm going to explain to you in detail and break down what he said and why I would not be worried. I'm here posting this video late tonight, way later than usual, because I want to help you guys to not lose money and to understand exactly what is going on right now. Don't worry about subscribing, smashing the like button, or looking for the coaching and Discord link. We will talk about that very, very soon. I want you guys to understand what's going on right now. So let's take a listen to what Jerome Powell had to say about the market right now. However, before we dive into today's video, I just want to let you guys know my free masterclass webinar is this Friday, tomorrow, December 20th, 8 p.m. Eastern Time, 5 p.m. Pacific. Every student that's ever attended my webinar said they learned more in 1 hour with me than anywhere else. There's going to be a huge announcement. I'll be answering your questions with a Q&A. I hope to see you guys there. Link to register is in the information box below. Very limited spots remain for this webinar. I will see you guys tomorrow.
Happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. If you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is: do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market, and we want to keep it that way.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways, appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be. We are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So.
So we heard what Jerome Powell had to say about the economy, and very briefly he spoke about unemployment and he also spoke about inflation. He said that there was slow growth around the world due to the pandemic and of course economy and inflation, but that the US has seen a stronger economy and we weren't dealing with as much repercussions of this inflation and post-COVID economic disaster that most places around the world are seeing. He said unemployment is low and that it's long-term anchored for inflation to drop further to their target of 2%. He said that unemployment was low, but the reason why it seems like unemployment is up or there's issues in the labor market is because the hiring rate is lower than normal. But this has us on track for a softening, which isn't necessarily needed, he said, but we're on track for a 2% inflation. Really where the big issue is, and I feel like it was somewhat intentional when he was asked the question about rate cuts at 25 basis points and why they felt the need to only cut once or twice in 2025 and that they may have to rethink their cutting schedule. But they're going to be cutting regardless in 2025. So whether it's twice in January or twice in April or twice in October doesn't matter as long as we get 2 rate cuts like we were supposed to. I think we're actually supposed to get 3 and we're going to get 2 in 2025. It doesn't really matter. What really triggered the market, or at least partially triggered the market in my opinion, is when he was asked if rate cuts could potentially hike. Could we rule out any rate hikes? There's nothing that could be officially 100% ruled out, which means just by saying that, no matter how small the potential, a rate hike is possible. So what everybody thought was the feds were dovish. We're going to get a rate cut. We're going to get an announcement of 3 or 4 rate cuts in 2025. But now we're only getting 2 in 2025. And now he's not even closing out on the possibility that rate hikes are out of the equation. And there's no guarantee there either, which also fueled a lot of the sell-off. However, that aside, let's not even talk about what Jerome Powell said now. I'm going to break this down for you. And this is what I teach in my Discord. I teach my students this, and I explain to them this in vivid detail because it's very important to understand. So if you are new to trading, trying to retire, or having trouble, and this market has got you scared and you just don't know where to begin, maybe you're having trouble before that, I offer a full Discord training course and one-on-one coaching, and it's what drives me every single day to teach students like you how to overcome these obstacles, make money, and retire early in the stock market. You guys can sign up at any time at investorcorey.com. The link is in the information box below. But if you don't believe me, you can take a listen to what Shane, one of my students, has to say.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on, I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up $6.4 thousand.
You went from day trading to my course and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. And, just 1 month, it blew away, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already in stocks. And now I'm up to 75,000.
So you guys heard what Shane had to say. If you'd like this to be your success story and you want to garner more knowledge in the stock market, learn and flourish and retire early, make safe, passive, consistent income, you guys can sign up at any time. The link is in the information box below. Just click on training when you get to the website and you guys can watch the video and then you'll be able to book a call with my team and I. This way I can help you achieve your financial goals. But essentially, this is all rigged. And they're lying to you. And what I mean by that is pretty much almost every stock pulled back relatively similar to one another. And then near the end of the day and after hours, it stabilized. What's actually going on is there's $7 trillion on the sidelines in money markets, SPACs accounts, FDI cash sweeps, treasury bills, bonds. This money is sitting out there and they want to get into the market. It's been steadily coming into the market since November elections and the uncertainties about the election went aside. However, now that the Feds have cut rates, they really want to get their money off the sidelines. And with that being said, the more rate cuts means the less money in the SPACs and FDIC cash sweep, which means you make less money on the sidelines and you have to invest. It's like, why would you play the hockey game or the football game making $3 million when you could make $2.5 million to do nothing on the sideline? But when they cut the interest rates, the sidelines is no longer $2.5 million, it's $2 million or 1.5. So now you're making double the money or more by actively playing or trading and investing. So that's why they want to bring their money from the sidelines into the stock market, but they don't want to do that at all-time highs. So the stock market needs to come down. And Jerome Powell gave them the fuel that they needed by not ruling out officially any rate hikes. So people started selling off. That triggered stop losses. At the hedge funds, they stop loss hunt. It's like a witch hunt. They just stop loss hunt everyone. There was a lot of algorithmic trading and it just slipped and dipped and the whole market came down, giving them an opportunity to buy in. But they're trying to shake you out of your stocks and your options. Let me show you on a chart why every single stock that I can think of pulled back almost identical to one another. It's like the biggest, most crooked orchestration I've ever seen. And I highly suggest holding. Do not let your shares or your positions go for a loss. I don't like the fact that they do this to people, but this is what happens in the stock market. And I'm here to help you. And I'm going to show you on a chart exactly what's going on. Look at this pullback on PayPal. Look at Netflix, Bank of America, Meta, Square, Roku, and you can rewind this over and over again. Look at this drop. Every single stock has the exact same per capita drop, per capita to the stock. Even Tesla, it just got bought up a bit after hours. Look at Walmart, Meta, Square. Look at it when I switched through. Every stock made the exact same orchestrated move. Look at Walmart, AMD, Walmart. Look at this. It's the exact same move, damn near. Even Microsoft. Look at this. Every single stock. Even Bitcoin looks almost identical. If we go over to Apple, it's the exact same thing. I wonder what Amazon looks like. I bet you Amazon is got like from here to here, exact same red with a little bit of green, little green resistance. You ready? Exact same thing. Every stock moved in tandem, everything at the same time. This is not someone saying Amazon's bad or Microsoft is bad or just trying to get out. The whole market, pretty much 90% of the stocks in the stock market pulled back in tandem, in correlation to one another, and per capita almost the same amount or the same percentage. This is computer learning, LLM, large language model algorithmic trading. This was a orchestrated sell-off where they stop loss hunted and everything slipped. And it's hard to say if tomorrow things are going to get bought back up, but in my opinion, it looks like we'll have some buy-ups. We'll pull back up. Maybe 30-40% of it will get bought back up, and by the end of the week, it'll probably dip closer to where it is right now. But there is a chance it could run mostly back up and stay stable where it is now. I say there is still some room to drop, but I strongly believe most of the moves already happened. A lot of stabilization will kick in by the end of the week. Things will start getting bought. It will stabilize, and next week will consolidate. And I believe going into the new year, maybe even a week or two after New Year's, things will consolidate. So basically all stocks will kind of pull up something like this and then kind of consolidate, maybe down, up. We're going to have kind of a very linear left to right stock market. I'm not ruling out a run or a pullback, but I have some confluence that a majority of the sell-offs already happened. We're seeing stabilization in the market, but it's orchestrated to shake you out of your stock. So do not sell. This is what I teach. Hold on, dollar cost average if you must. Things will get better, especially going to the new year. We also have some tax loss harvesting that's probably going to go on with this. And that's what also caused it. We have the sell-off. We have the slip, stop losses, then people saying, okay, I'm just going to take losses for tax loss harvesting. Then it kicks in even more. And then buyers are now taking advantage of this. And we've got these interest levels right here. We go to Microsoft. Look, high area of interest right here and right here. So people start buying it up. Palantir, we can see right here, high area of interest. So it's going to get bought back up. If we look at Tesla, it's the exact same thing. High area of interest. We go to Walmart. It's exact same thing. This is all psychology. I've been teaching you guys this. You see? So I teach in my Discord. It's literally pulled back. Every stock has pulled back to a psychological support. Every single one of them. It's all psychological support. See? Right here, right here, right here, right here. And it's right in the middle. All this psychological support. Netflix, no different. Psychological support areas. You think PayPal's any different? I bet you it's not. Told you. 1, 2, 3, 4, 5, 6, 7, 8. All this support in this area. Everything has pulled back to a psychological support. Look at Square. Same thing. Right here. See this? You can't make this up. Everything pulled back to a psychological support. Look at Roku. Again, literally pulled back to the support. All these areas of support. It's literally every stock in the market. It's the same tandem move. See, right here, right here, right here. Same exact move. Every stock made the same move. Don't worry about this. I want you guys to understand what's going on in the stock market. Don't let them shake you out of your stock. This is all a manipulation game, a game of lies. They're lying to you. The market will recover. Just dollar cost average and try to get yourself in a position where you have an average cost that's now lower. This is a buying opportunity. You see red, you buy. You see green, you sell. This is what I teach in my Discord to my students. This is what I teach in the webinars and here on the YouTube videos. Don't sell your shares short. You're selling at the bottom, buying at the top when you should be buying at the bottom right now and selling at the top. A big move will be coming in the spring or maybe even later on this month and into January, depending on how things go. Don't get shaken out. Don't forget, guys, my free masterclass webinar tomorrow, Friday, December 20th, 8 p.m. Eastern Time, 5 p.m. Pacific. Do not miss it. There'll be a lot more like this in tomorrow's webinar. Link to register is below. Very limited spots. I'll have a huge announcement. I'll be answering your questions in a Q&A. Don't forget, I hope to see you there. If you guys want to sign up for the coaching and the Discord before the end of the year, you guys can do so at any time at investorcorey.com. Links in the information box below. Click on training, and then you'll be able to watch the video that answers all of your questions, and you'll be able to sign up and book a call with my team and I right there on the website. I look forward to helping you on your financial journey. And that's going to do it for this video. I will see you on the next one. Take care of yourselves.